There are two things in life we can be sure of. Have you heard the saying before? Death and taxes is the answer. Today we're going to talk a little bit about taxes, specifically focusing on the income tax structure. When you look at all of the different ways that we are taxed, there's several different ways. A lot of times we immediately go to the income in the sense that we pay income taxes to the federal government, to state government. Sometimes there's even cities that have an income tax, as well as their FICA, which includes items like Medicare and Social Security. Those are going to be coming out of our normal income. We also get taxed on the assets that we have. If we own real estate, then we're going to receive property taxes. If we own stocks and we receive dividends off of those stocks, then that would also include its income and we would be taxed on that. As well as if I own stock and I gain a value on it and I sell it for more than what I originally purchased it from, I would be having capital gains taxes that would be added to that. Now, there's other aspects too in the sense of sales tax. Sales tax comes into play. It depends on where you're at. So there may be sales tax just on general purchases. It may be only on luxury items. Maybe if I'm purchasing a car or a boat, something like that, as well as food purchases. And there may be a difference in the sense if I am buying groceries or versus if I am dining out. Excise taxes are going to be on things that are more extra. It could be, cigarettes or alcohol or purchasing gas or traveling. If you go to a hotel, you're going to see many times there's going to be an additional tax for that hotel room. So as I mentioned, there are different income tax rates state to state. So federally, we fall under one structure, but then each state gets to decide if they want to have an income tax and what that rate is going to be. And so here's a map that shows you what the different tax rates are. And you can see that it really does vary from nothing with some states like a Washington to, on the higher end, like in Oregon or California. Then there's sales tax. And as I said with this is also a case to where state by state, those states will decide how much that sales tax is going to be, or if they have one at all. And so Oregon has no sales tax, but you did see also that they were on the higher end of the income tax structure. So there's definitely a way to be able to balance that out. And it's two different forms of the states being able to generate revenue to have state operations. The kind of basic structure that we look at when we're talking about income taxes is this kind of full process of it. From one to when I go and I get a job, my employer is going to ask me to fill out a W-4. In 2020, the W-4 form actually changed. It used to be a relatively simple form where it would add up the different exemptions that I have. If I'm, head of household, to living on my own, to being married, to having children, and I would add that up, and then that would factor in to how much taxes are withheld on the pay stub. They have changed the W-4 now in 2020 to where it's actually going to ask you all the different areas that you have income coming in from. If you have multiple jobs, then this is actually going to be probably a better solution for you, because if you're filling this out with just your employer based on the exemptions or the allowances, it may not capture or understand that you are getting that income from that employer plus a second or third or a fourth employer. So the W-4 form, if you have not revisited that with your employer since it relaunched in 2020, I definitely encourage you to take a look at that. So the W-4 is what's going to drive how much they are going to withhold from our pay stub. So the pay stub then is taking that money out, and it's really just the estimate. The W-4 is just estimating how much they think our taxes are going to be and how much we should be withholding. At the end of the year, our employer, by the end of January, is going to send us a W-2 form for providing that overview of what was withheld for the year prior, how much money we make. We then utilize that W-2 to then fill out our tax return, which is due on April 15th. So let's look a little bit closer at what a pay stub looks like. When we're taking a job or accepting that job, we're going to be accepting it based on the gross pay that we're going to be receiving. If it's, a certain salaried amount, or if it's a certain hourly amount, that's what we're going to be accepting that on. But then from that, all of these different deductions are going to be coming out. So it's the estimates in our federal and state withholdings they're going to be withdrawing, as well as Social Security, Medicare, those FICA amounts. If I have the opportunity to take part in a additional savings plan, such as a 401k plan, that's also going to be withdrawn here. So you take that gross pay, you subtract out all of those different aspects we talked about, and then that's going to give us our net pay. And the net pay is what we then are budgeting off of on how we are going to be living and utilizing those funds. As I mentioned, on the end of the year, the employer is going to send us a W-2. So the W-2 is going to provide this summary of all of that information that took place during the year. So what are the total wages that I earned? What is the total amount that we withheld for federal and state income tax? Now, notice there's a difference between the wages in box 1 versus the wages in box 3. Where this comes into play is if I do take part in that 401k plan, I'm not going to be paying taxes on those wages right now. So it's showing you those taxable wages are actually going to be different from what the gross wages that I made. So we're going to take that information from the W-2, and we are going to go through and fill out our taxes. And we'll talk in a moment about the different ways that we can be able to fill out our taxes and calculate that. We're going to take the calculate what the total tax owed I have based on all the information that we went through, subtract out those taxes that I withheld from my paycheck throughout the year, and then that's going to show me what's either, taxes that I continue to owe, or if I'm going to be receiving a refund. I always encourage that you really should want to be kind of shooting for that number to be 0. You don't want to have a huge tax bill at the end of the year, but then you also don't want to have a huge refund, because essentially if you have a huge refund at the end of the year, it says that the government was holding onto your money without even giving you any interest for that. And taxes have to be filed and paid by April 15th. Now, there is the opportunity to be able to apply for an exemption for 6 months. Now, with that does not mean that you don't have to pay. If you owe money, don't assume that you can file for an extension and you then have 6 months to be able to pay for those taxes. You actually have to make sure, even if you are filing an extension, that you at least pay an estimate if you are going to owe money with your taxes. Getting all the information for taxes can be really time consuming. And so spending time to be able to develop a tracking system is really going to help you at the end of the year when you're figuring it out, because you're able to make deductions on your taxes. So if you make cash or you donate to like a Goodwill, those are actually deductions that you can take off of that taxable income. Figuring out what expenses you may be able to deduct, and that can include student loan interest or some of your tuition costs. Compiling information. If you have a side hustle, if you drive Uber or have some other aspect to where you are essentially a contractor, then you actually are going to be getting a 1099. And if you do have one of these side hustles that pays you, but they're not actually withdrawing the estimate for the taxes, it's really important for you to make sure that you are setting aside money for those taxes, because you are going to have those applied at the end of the year when you file your taxes. So figuring out, what is that tracking system? Is it, keeping a file? I know myself, I keep a file, and anytime anything is related to taxes, I put it in that file. Then at the end of the year, I crunch all the numbers and put it together. If you use a system like Mint or your bank account has an online tracking system, many times they're going to have a flag that you can apply to a transaction. And so if you make a donation to a nonprofit organization, you may be able to just hit a a flag that says, hey, this relates to taxes. And then at the end of the year, you can pull up all those flags that relate to taxes. But the important thing is just figure out a way to make this easy for you. If it's, if it's that file folder, if it's an electronic folder, if it's a software that's going to help you, whatever you can do to set that process in place is going to help you save some time when you're looking to file your taxes. There are a lot of different ways for you to receive support to be able to file your taxes. So you can prepare your tax return by yourself, and you can go to irs.gov and they have all of the forms to be able to do that. You can hire somebody to be able to help you, but really I wouldn't worry about hiring somebody until, really your taxes get complicated. There's a lot of softwares and groups that actually provide free tax preparation. So, if you're looking at here in Oregon, there's an organization called Cash Oregon, which you can go to, and they will help you to be able to file your taxes, and a specialist would help you with that, a volunteer. Or there's software programs like TurboTax, to where if you're below a certain income threshold, which I think is like in the high 60,000s for income, they'll actually allow you to utilize that software and it doesn't cost you anything. So that's our conversation on taxes today.